Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy. We are about to begin the week following the half-point interest rate cut that was put in right over here on September 18th, and this is the one-day S&P candle. This is the S&P index, not the Emini. And the market, since that interest rate cut announcement, the market has traded higher, but is looking to not be able to maintain the momentum to the upside. So I would expect that the market is going to slowly close this gap down here, 56.17. It's about an 80-point gap. Looking at the E-mini, I have my chart plotted with the Taylor trading zone for Monday, 57.38 support, and 57.88 resistance, a 50-point range. And it's important to see where the market opens on Monday morning. If it opens toward the middle of the trading zone at equilibrium, I would expect the market to trade in the early hours to the upside and then close lower for the day. As to closing the gap from the 18th, I would suspect that gap will close, but I don't think it's going to close on Monday. I think it's more likely to close on Tuesday. So that's my prediction for Monday, September 23rd. I just don't think the bulls can maintain the upward pressure that we've seen over the last few weeks. And that, of course, was due to the Fed interest rate cut that was widely expected. Thanks again for watching. Marv Eisen from Timeless Dollar Trading Academy. Trade safely, use lots of patience, and I'll see you in my next video.